Hello, everybody. Welcome to Monday. The S&P 500 was down 1% today, and I want to assure those of you who are clients, what we are doing during this period of time. We have our model portfolios, which make up a majority of our assets under management. We have some legacy holdings, things that people brought in that they wanted us to keep on top of those model holdings. And what we've done is we have seven stock positions and six bond positions. Starting on the 30th of October, we started getting sell signals on those positions. And as we did, we sold them and moved them into T-bills, ultra short-term bond ETFs. So essentially out of the market, out of the bond market and out of the stock market. And we continue to do that all the way through all these different positions to the point now, as of today, we don't have anything left in those 13 positions, either stock or bond. Everything is in T-bill or short-term, ultra short-term bond ETFs. Now, the S&P 500 has fallen 9% since the 30th of August. So this has worked out quite well. We've avoided a lot of losses that have happened during that period of time. And one thing that worked out even better was last Thursday, we took a chunk of the total stock market index that signaled a sell and moved that into an inverse position that goes the opposite direction of the S&P 500. And that has paid out quite nicely. That's up here for the Friday and today. Both days were big down days for the total stock market index. And that position was up both of those days because it goes the opposite direction. So if you think about it, most of the money is in these kind of T-bill ultimate short-term bonds that don't move that much. And basically the one thing that's going to move is the inverse position. So when the market comes down like it has been, we're actually making money here. And again, we haven't sold the legacy positions and we haven't sold the high capital gain positions that we have in our taxable accounts. So everybody's got a little bit of a different exposure depending on what you've got, and probably even different by account as far as that goes. But suffice it to say that we were in a very defensive position. Today, the S&P 500 closed at the low for the year and is very close to breaking through the intraday low in the S&P 500, which is 3636. I think this is a time frame to really pay attention. We could get a bounce here because things are so oversold. But if we don't, there could be a fairly big fall from here just because, again, there's not a lot of support from where we are now to the next level, which is about 10, 11% below where we are now. And so, again, if that does happen and the market does fall, we'd actually make money in that environment with this inverse position. And so that's the hope. We'll see what happens. We'll continue to add to the inverse position if the market continues to come down some, but really we're just kind of waiting for a period of time to be able to get back in and we can get back to our normal models and hopefully, things start to improve. But we have to wait out and see what's going to happen here when you raise rates the way the U.S. has been raising rates, and now they're starting to raise them around the world, and the dollar goes skyrocketing up like it's doing right now. You are asking for some type of crisis to happen, whether that's a currency crisis or some big debt default or what have you. They become more likely. And that's why people are waiting it out and they're pushing money to the sidelines, lots of money coming into, the money markets and things along those lines. And so, again, we're in a good position for this. We're ready if there is additional downturn. We're ready to move back into the market if it starts to move up. But right now, we're right on the edge of that cliff that I've been talking about. And we have a maximum parachute, I think, kind of developed at this point in time, ready for that if it does happen. So just to let you know that you can kind of relax about what you're hearing in the news about what's going on with the economies of the world, what's happening with inflation, what's happening in the UK. They're having some problems there with some different thoughts that they're doing with their taxes and what have you too. So nonetheless, just want to be very clear as to what we're doing here, how this is working. It's working out fantastic, actually. We're really, really doing well versus the market since the end of August. And so hopefully this helps as far as that goes and let you kind of be a little bit at ease. And we're going to continue to dig through some of these higher capital gain pieces just to see, what we should be doing there also. But nonetheless, that's what's going on today. I look forward to being able to talk to you tomorrow. A great time to be looking at what's going on with the market. Thank you.